Jeremy Awori, CEO of Barclays Kenya. It's a pleasure listening to your Mind Speak session today, and thank you for taking the time to share a few personal comments with me.
No, I think it was a really great experience, especially with the audience and with the questions that were coming from the audience and online. I think there are a lot of questions that we really need to be interrogating and then turning into action or thinking about. And I think for me, I always learn from these experiences, and it gives you food for thought around how should we tackle certain things, what are people thinking about, how as leaders, how can we turn those into opportunities, either within the companies we work or as responsible leaders within the country in which we live and work. So it was a great experience.
A fascinating discussion, and if I can just touch on a few points, because you elaborated on many. Jeremy, what struck me as a very interesting point you were making was the level of regulatory environments, multiple regulatory environments you've got to navigate. You made the point, said if something goes wrong in our payments in Barclays Kenya, it could impact the correspondent banking relationships of the PLC. Now that is a risk that probably no other bank in Kenya has, except maybe Standard Chartered. It puts a whole different sort of level of control. You're describing how you're a pharmacist before and operating in control environments. Has that been a hindrance to you, or has that been a benefit to you as a bank operating in the frontier in sub-Saharan Africa? How would you say has it helped? Has it hindered? Does it make a big difference?
I think there's two aspects to it. I think banking is about trust, yeah, yes. And people bank with us because they trust the strength of the business, they trust the brand, they trust our longevity here around the security of their funds and around our practices, yeah. So from that perspective, because they know we're also regulated by multiple regulators, that has been a positive. On the flip side, because you've got a higher standard in a sense, because we have to adopt the highest standard of any of the regulators, yeah, across our group businesses, there are times when you've got an uneven playing field. Yeah, so we will insist on certain documentation for certain transactions because we must comply with anti-money laundering and anti-terrorist financing practices. Yeah, obviously we are very stringent around anti-bribery. Yeah, know your customer, know your supplier. And there may be some players who don't have as stringent practices. So that can create a little bit of an uneven playing field where they say, but I wasn't asked for this in this bank, why are you asking me for this? And some customers do find it a little bit intrusive, truth be told. But the reality is I think over time now, many of the governments are now insisting that if countries are going to trade with them, that they're also insisting in this. So the time is coming where the regulations are also going to lift up for all local players. And I think that will be good, not just for the banking industry, because it will mean that we've got tighter controls across the industry, but it'll also give foreign investors and people doing business here in Kenya that confidence that the level of controls is actually right going forward. And we've seen, for example, changing in corresponding banking relationships of some of the local banks. Because if a correspondent bank is not comfortable with the level of your controls, they'll just stop providing
we
the services.
saw that, I think Deutsche Bank in particular.
Yeah. So I think increasingly the lens is going to focus on this going forward. Yeah.
So you think it'll be a more equal playing field?
But we obviously have to evolve, and I
Yes.
think the central bank is doing its best to try and really drive the level of controls and practices within the industry as we navigate.
Can I, you spoke very clearly about the divestiture, but can I just touch on a couple of things from my perspective? I remember a similar scenario when I was in London, and it was a possible merger between Dresdner Bank and Deutsche Bank. Here we have a divestiture going. And I remember also being in London and running a Latin American business, and headquarters would come with a macro number like, this is how much our exposure has to be, and you'd have to stay within those limits. Do you see, is there a chance that this is actually a moment of liberation for Barclays Africa, Barclays Kenya, in that you are now fully, authorized, you're not being kind of remote controlled from somewhere? How would you characterize it that way? Because from listening to you today, Jeremy, and what you've done in the last couple of years, it seems to me you've got a clear plan, and you're executing that plan. To quote you, you said it's about having a vision and the execution.
Yeah.
Am I characterizing it unfairly, or?
No, I personally believe that the divestiture, we understand the reasons behind the divestiture.
Yes, you explained them.
Yeah, PLC still is saying they want to retain a stake. Yeah, it's just a lesser stake.
Yes.
Yeah, for regulatory and accounting.
They don't want to consolidate.
Yeah,
yeah.
They don't want to be having to hold capital.
Yes.
100% capital against a lower stake. Yeah, so I think once they achieve that, just Daly as Group CEO has indicated that. I look at it as fundamentally an opportunity. Yes. Of course, there will be challenges as we go through that transition process, but fundamentally, we now will become a big and strong regional bank, yes, you know, with a long history. Yeah. Barclays Africa Group Limited understands the franchises that it owns because it's owned them for a while now, and I think we will see an ability to do things possibly that Barclays PLC probably didn't have the appetite for, yeah, because of the experiences that they had elsewhere. So, for example, if you take a standard one around property financing, yes, yeah, construction financing, with the financial crisis, there were a lot of markets where they were significantly exposed and they lost money globally. So, of course, you can now imagine where we are in our trajectory of property financing. The instinctive reaction would be to recoil and withdraw. Yet we're in a different stage of development. Our market dynamics are completely different. So you would find it was a harder sell into PLC than maybe it might be into Barclays Africa and our local board. So we see a lot of opportunities around business that we can do. The inherent strengths that Barclays Africa has and the South African business has. So I look rather more for the opportunities than the challenges, because we're in the right place at the right time. Yes. A continent that's on the move, a region that's in the move. Kenya is in an exciting place with all the innovation. The question is how do you commercialize and turn that into decent returns for our shareholders here and those who have invested from abroad into the Barclays franchise.
Well, just for any shareholders out there, Jeremy's paying a very handsome dividend. I think it's double digits on the share price. I was doing my homework on it, and I think it's a very undervalued share price. I think in part impacted by the whole noise around the divestiture. But to anyone who's out there, I think I'd recommend having a little nibble at the share price. And especially after what you've heard from the leader today, I think it's really a valuable share. Jeremy, you had this big announcement a few weeks ago. You cross-listed a gold ETF here in Nairobi, the Security Exchange. You've made this big thrust into bank assurance that you've been talking about. Just tell us a little bit about the landscape. And of course, then you got this huge disruption happening out of fintech. And from what I could hear, you were kind of saying, from what I heard, that look, if there's a good business out there that makes sense, we're going to be possibly an acquirer of it. How do you look at, and how much flexibility do you have, and what's that landscape looking like?
Yeah, I mean, I think there's an Africa landscape, and then there's the Kenyan landscape.
Yes.
Yeah. So
that's it. Yes.
You know, and that varies. So when we say Kenya is unique, it actually is. So if you think about, say, the mobile money space, yeah, East Africa has something like 70% of the world's mobile money in terms by volumes going through it. Yeah. So that makes us relatively unique to, say, a Seychelles or even a South Africa, where they've got different kind of payment mechanisms available to them. So as management, obviously, as being part of a regional and global franchise, there are certain things that they want consistency of across their franchise. Yeah. And we're actually working through refreshing and refining our strategy around where we play and how we participate in those different segments. So we see a lot of opportunities. I've mentioned one, bank assurance. Yes. Yeah. That was literally from a standing start, a 500 million shilling new revenue business in less than 2 years. Yeah?
Yes, because the acquisition happened just a few short years ago.
No, the acquisition is even separate. Because the acquisition is not an acquisition by Barclays Bank of Kenya into those entities. The acquisition was by Barclays Africa Group into those entities.
Okay.
Yeah? So those entities originate product, whether it's life assurance or the acquisition of First Assurance, which has general insurance products. Yes. So we actually sell their products.
Okay.
Yeah?
All right.
So we have our own subsidiary and we sell their products, among other insurance products. So from being nowhere, we're actually one of the largest players. And I still believe there's so much opportunity for all the players. So it's not around taking off somebody else's pie. It's around how do we deepen the pie. So bank assurance is exciting. You've seen the launch of the gold ETF, the first exchange traded product.
Yes.
What we were trying to do
And
is
probably at the right time, given your first slide,
exactly,
which was
exactly
about geopolitics. Yes.
Exactly.
Yeah.
So we're now offering people opportunities to mitigate some of their exchange rate risks and invest in products that we believe have opportunity. And it's the 7th largest gold ETF in the world.
Yes.
Yeah? So it's a massive product. Obviously, people were looking and expecting there to be an immediate uptick.
Yes.
But as investors, you have to get board approvals. You have to sign documentation initially, especially if you're doing it from a fund perspective as opposed to an individual perspective. But we're encouraged that we've seen trading. And as people become more aware of the product, we'll expect to look and see that growing. The brokerage business is growing. Our investment banking business is growing. We've participated in a number of deals. We were one of the lead mandate arrangers for the sovereign bond, and there are more transactions which we're working on. So we are encouraged that there are lots of growth opportunities. Obviously, it's muddied by the interest rate law.
Where you were quite outspoken there, you were saying you're expecting deceleration in private sector credit growth, which has come from above 20 to about 4 something.
Yeah, that's already happened.
Yes.
And the question then becomes, how much further deceleration is going to happen? Because the reason for that deceleration is not that banks don't want to lend, but they have a responsibility in terms of the return on equity that they deliver for shareholders. Otherwise, the shareholders will sell their shares and invest elsewhere. So we're trying to balance out returns from actual lending. Now, at the same time, banks have to right-size their business models, invest in more technology. That doesn't happen overnight. So in the short run, we don't want to see that deceleration impacting economic growth. And I think there are sensible conversations happening between government and the different stakeholders to say, how do we achieve a goal where we open the sector back up, but at the same time don't move to a high interest rate environment which starts choking off certain people from accessing credit. But there's a risk-return equation that banks have to say, I'm willing to take a higher risk, but I expect a higher return to pay for that risk. And that's what's been locked out by the cap.
So it's the higher risk.
The higher risk are the ones who are not going to be able to get. So what you've seen is an increase in credit consumption by those who are lower risk the banks are comfortable lending to, but locking out of many new credits and many higher risk, which I don't think is the answer in the long run.
Can I go back to a personal comment you made about disrupt yourself? I mean, we sit here, the example I use is you called it an Uber moment. I'm an Uber fan now because I used to have a taxi driver. When I called him up, I didn't know if he really was where he was telling me he was. I didn't know, how, and now I'm de-stressed. I know where the guy is.
When he's coming.
And it's cheaper and I'm using it. And for banking, it feels like, you've got the interest rate cap on one side, you've got this disruptive moment, you've got these fintech guys coming. How is Jeremy Awori's Barclays positioned in this disruption? What's the theme? What are you trying to do here?
I mean, one of the things we're looking at, one of my major themes is around digital, automation, machine learning, that whole getting really competitive and capable on that front. Now, so we've invested significantly in our capabilities. We've got a whole innovation strategy. We do ideation sessions. We do hackathons. We've got a whole series of things, and what that does is people come with their ideas, and then we support some, and then we try to take those ideas through to commercialization. So that program is working in and of itself, and there's some products that we are already in sort of the final stages of hopefully bringing to market. Now, for us to do that, one of the things we need to look at is how are we structured commercially, because it's very difficult for a bank as a banking entity to buy into a fintech. But if we have a holdco type structure, it gives us more flexibility around what levels of ownership we can take, whether we buy in, when we sell out, and the role we want to play. So we're excited from that front. But we're also looking at how do you Uberize banking, for lack of a better word. And I think when we put it that way, then people start thinking how quickly the taxi business was transformed by an application. So I ask myself every day, how do we digitize every process? Because we've got a lot of processes that are paper-based. We keep jotters, we have manual processes, and people take safety in paper. But the world has moved on. You can still maintain your controls even though you've got a digital record of what's happening. So we're looking at that also in terms of our back office, our front office in terms of the experience, the products we build, the convenience we deliver to customers. So it's really that disrupting yourself before somebody else does. And if you don't, it'll be done to you. So you're better off doing it to yourself, even if it does cannibalize your product. And when I talk about disrupting yourself,
what do you mean by that?
You literally disrupt yourself. Yeah. So the question is like I said, you get to a point by doing certain things. But the question is, are those things still relevant for you in the future? And it's a thing to keep reflecting on as an individual, to say, how do I evolve? How do I scale the next peak? So it's a bit like, say, climbing a mountain. When you're in the lower part of the mountain, you need different gear. Yeah, you need good boots and whatever. Now, once you start reaching steeper and steeper climbs, you start needing different support systems. You need different equipment. Otherwise, you won't be able to make it. So from a career perspective, how are you disrupting yourself? What skills do you need to build? Yeah? How are you keeping up with digital developments? How are you managing information? What does your personal brand look like in this new environment? Yeah? How are you going to remain relevant to customers? And that applies to everybody, starting from me to young people embarking on their careers. Yeah? So I had to do it when I was moving from pharmacy into a different business.
Yes, which was a pretty big...
It's a complete change. Yeah, but I guess it's very humbling because you realize how much you don't know.
Yes.
So if you open your mind to learning, you open your mind to seeing what you can do differently, also not believing that everything has to stay the same, because you can ask all the dumb questions because you're new at it. And the pace of change is why I said there's no more an exciting time to be now.
You were saying change is exponential, basically.
Yeah, it's exponential.
Yes.
Yeah. So you may be nothing today and having an amazing business tomorrow, but equally so you might have an amazing business today and nothing tomorrow.
Yes. No,
so
that's the scary thought.
That's the scarier part. So I always say every year you almost need to zeroize your past.
Yes.
And say, and now I need to continue to be relevant. So it's the same for a career as it is a business.
Yes.
That's what I mean.
Very, very interesting, Jeremy. I'm really grateful for today's time. I really enjoyed the presentation. It was very powerful. And thank you so much for finally coming.
No, thank you. Thank you, Ali Khan. I appreciate it.
I appreciate it.
Thank you. Thank you so much.
Thank you.